That doesn't happen a lot, so go ahead and pick them up. This is probably one of the safest stocks on the list long term. Hey, what's up YouTube? This is Foxtel Digital coming to you again with Black Girl Stocks. And in this video, we're going to talk about a few of the top stocks to look into buying for the rest of 2022. So we're a little over halfway into the year. In this video, it's really going to be talking about stock shares. So at the beginning of the pandemic, we didn't know what to make of the stock market, if we would ever recover from this. But the growth over 2020 and 2021 took a lot of analysts by surprise and actually gave way to an official bear market in the first half of 2022. So there are a lot of opportunities in the market with some of our favorite stocks at great discount prices and high yields. And before we start, I want you to keep three things in mind. These are only my opinions. These are long-term investments, and there's a good mixture of stocks from different sectors on the list. Leave a comment below and let me know what you guys think about these stocks. Now, first stock, Amazon. Amazon made big news in June with the 20-for-1 stock split. So when a company has a stock split, it basically divides each of the existing shares into multiple new shares. But the overall value of the company stays the same. So in a 20-for-1 stock split, each share of Amazon split into 20 new shares. So if you had a share before the split, now you have 20. I bought a few shares like the day after the split, but that high came and went very quickly. Amazon stock is down since the beginning of this year. Honestly, not too far off from where it was pre-pandemic, but check this out. History does tend to repeat itself, and this isn't the first time that Amazon took a tumble. Amazon shares dropped more than 30% back in 2018 and more than a quarter of their value in 2011, 2014, and 2016. So every time Amazon stocks did the dash, okay, it always comes back bigger and stronger than ever. And you can say, okay, Amazon is huge right now. Its growth phase has come and gone from when Jeff was in that garage. But, ask yourself this. Do you buy more things on Amazon today than you did 4 years ago? I know you have Amazon Prime. And do you see yourself ordering more things from Amazon in the future? The answer is more than likely going to be yes. So outside of just being a monopoly retailer, Amazon is the #1 player in cloud computing services with its AWS platform and advertising segments. Amazon also just bought one medical healthcare chain for $3.9 billion. So this is going to be a major expansion on Amazon's healthcare branches. This is the lowest it has been in 6 years. So this could be a cute entry point for long-term holds. Speaking of stock splits, Google, or Alphabet, its parent company, similar to Amazon, they also had a 20-for-1 stock split. The company shares went from $2,200 to about $100 per share. This could mean a spot for Google to enter the Dow Jones Industrial Average. And this is also huge news for newer small retail investors to get a good piece of the pie. No more of those fractional shares, okay? I want my full share. Now in 2021, Google stock jumped 65%, and right now Alphabet is down 30% from its all-time high back in 2021. So this bear market pretty much wiped out all of 2021's gains, but even after dropping almost a third of its value, Google wasn't a cheap stock. Now the question is Google a buy right now? Google's core business model, internet search, has become a human need at this point, but the way that Google monetizes internet search is going through a transition, and we've seen how advertising has affected the market and a lot of businesses during the pandemic. Snap stock plummeted after they announced less revenue from ads. So, this won't be forever. Ads can be turned off and on like a switch. And digital marketing will continue to grow in the future. And they don't pay dividends, okay? I didn't care for that. But they make up for that in share repurchases. And that's when the company buys back large amounts of company shares. And, when you have buying in the shares, that makes the stock price increase. So the shareholders are going to get some of those profits in a way. Throughout Alphabet's history in the stock market, it's fallen more than a few times and come back every time. So they have my blessing. Now for the financials. The crypto crash got out of control, and fintech stocks pretty much had the same experience. So these businesses use technology to enhance or automate financial services for businesses and consumers. Now, PayPal is the largest digital platform that provides money transfer services. I literally use PayPal every single day. It's a part of life for me, as well as millions of other people. They also own Venmo. If you're sending money to someone or receiving it and you don't use PayPal or Cash App, the next payment solution is usually going to be Venmo. So right now, PayPal stock stock is down almost 50% this year and over 60% since last year. So we'll keep our eye on PayPal. It's been moving pretty well lately. Next up is Disney. Disney's had a tough year in 2022 with more competition in the streaming space, higher inflation, operational costs, labor shortages, and a nasty pandemic, and a very public fallout with the state of Florida on their special tax status. They're down over 40% from its 2021 highs. Hold on. So Disney is the top name when it comes to family travel and entertainment. In 2022, demand for Disney's theme parks and movies is kind of starting to bubble up. So Disney's had an incredible catalog of media magic as well as the Marvel Cinematic Universe and Star Wars. So even with the huge dip, how often does the opportunity to own shares of an iconic American company come around? Okay, so make sure to pick up some Disney. Next is going to be a mixture of two, Lowe's and Home Depot. Just the housing market in general is in shambles. A lot of millennials aren't getting homes because homes are expensive, and for a lot of other reasons, but a big one is supply and demand. So the supply of new homes just doesn't match up to the demand. So new homes may be out of the question for a while for a lot of us. But that leaves room for more opportunities for hardware and home goods stores like Lowe's and Home Depot because more people are interested in investing into their homes and doing more home improvement projects during the pandemic. I've seen more home improvement reels on Instagram than I ever had before. Lowe's also just announced a 31% dividend payout, so that's a positive sign for profits in the future as well. Lowe's is one of the aristocrat dividend stocks, and that's just a list of stocks that have continuously increased their dividend payouts over 50 years. So this one is a keeper. Right now, Lowe's is down about 35% from 2021's highs, and Home Depot isn't too far behind. Invest in what you know and own, right? All right, next, Target. Okay, Target, one of our favorite places to shop. So you can see that Target did very well during the beginning of the pandemic, but that started to slow down as consumers spent less money in home entertainment items like TVs, PS5s, and movies, and they started to use that money for more discretionary income and for away from home experiences like travel, restaurants, and concerts. People weren't focused on luxury retail, so high-end places like Target were forced to mark down a lot of inventory and cut orders to make do. Now, of course, inflation hasn't helped, so Target is down close to 50% from its 52-week high. So even with these numbers, you wouldn't think, it was an issue. Target just raised their dividend payout, so they aren't worried too much. We could see some nice movement from Target going into 2023. Now, real estate is one of the most lucrative investments with so much demand for distant orders. Logistical real estate is going to be needed. Prologis is a real estate investment trust, or a REIT, R-E-I-T, that owns and operates over 45,000 buildings with over 1 billion square feet of space. Prognosis shares are down 35% from their 52-week high, and keep in mind, REITs are interest rate sensitive, so the Fed's hawkish increases haven't really done the stock a lot of favors. They have a strong dividend yield that's almost 30%, and they stand to recover in the second half of 2022. Chevron. So energy stocks went crazy in the first half of 2022 with rising crude oil prices. With the war overseas between Ukraine and Russia, there's just been a lot. Chevron shares have almost doubled going into May, but a couple of rough months sent those down about 20%. So a lot of people could say the energy bull run is over, but that might not be likely. Energy stocks are still considered cheap and undervalued compared to the greater overall market, and they also pay some of the highest dividends. Chevron has a dividend yield of 3.8%. Energy was a top sector during the 2000 tech bust. Just keep an eye on it. Energy Transfer LP. This is another stock in the oil and gas industry. Now, like we talked about earlier, energy stocks have been a go-to in 2022, even though most of them took a hard hit around June. Just let the market take its rest. It's normal to have pullbacks in strong trending markets. Now, energy could have a solid finish by the end of the year. Energy Transfer has a huge network of over 100,000 miles of pipelines across the country. 30% of America's crude oil and natural gas is transported through Energy Transfer's pipelines. So naturally, the stock is going to see some loss in a bear market, but the long-term gains can't be ignored. So we're going to keep our eye on this stock. Nvidia. So we talked a lot about the overwhelming semiconductor chip shortages in our top 3 option plays regularly. memory, AMD, MU, Nvidia. So the chip market is a huge component in things that we use every day, like cars, appliances, some of the largest supercomputers in the world, and Nvidia chips are used to mine Bitcoin. Nvidia makes the world's top graphic processing units, critical to some of the computer trends today like artificial intelligence, self-driving cars, and cloud computing. The chip business is booming, so it's not crazy to assume that Nvidia is going to swing back into glory when the economy whips into shape. Bottom line, it's not a buy right now, but definitely add Nvidia to your long-term watch list. So if you're just starting out investing, please make sure that you watch this Q&A video where I answer some of the top questions for you guys that come straight for you. All right, so there's a part 1 and part 2. I hope you guys enjoyed this video. Make sure you click that thumbs up button. Really helps the channel. Make sure that you subscribe, click that notification bell, and I'll see you guys in the next video. Bye.